Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. We've made it to the end of the week. What a week it's been. All right, so what's going on right now? Well, the Dow's up about 400. NASDAQ's up about 100. We're having an update. What we're doing is really this tug of war between the bulls and the bears. The S&P/Y is sitting right at that 20-day moving average, and the bulls and bears are chugging, trying to get it to go each direction, right? Now, which direction do I think it's going to go? Well, I could actually make a case for both sides. I mean, that could be a big short covering rally. Everybody short this market. It could explode higher from here. Now, the downside, well, look at the bond market today. The bond market, the 2-year bonds hit 4.65%. I mean, they go above 5%, and you will see this big crash to the downside. Now, they came in, they started buying the bonds. I won't speculate on who that was. I have an idea. I think you do also, but they came in, they started buying the bonds. So 4.65 on the 2-year bond. That's awfully high, awfully high. That could send the stock market crashing down. So the tug of war, it's going on between the bulls and the bears, right at the 20-day moving average on the SPY. Now, I could make the argument both ways, but I'm actually guessing that we're going to come down and retest the lows. Now, here's why. Now, the NASDAQ, which is the QQQ, it's having trouble getting through that 20-day moving average. Now, if the NASDAQ powers through the 20-day moving average, then we could see it, off to the races. We'll see if that happens. Right now, I'm saying that's not going to happen. I'm saying we're going to get this pullback and we're going to come down on the SPY, down to about the 350 level again, maybe even break a little below that. This, once again, is just my take. I mean, I'm sure you got your own ideas as to where the stock market's going. That's my ideas. All right, let's move over to the real estate market, because I always find the real estate market funny. Now, I find this very extreme funny. Okay, so Redfin, now came out at the beginning of the year back in January, and I don't have the exact numbers, but they were predicting an up market for the year, up about 10%, I think it was. Well, it's already down, approaching 10% down for the year. So they were a little off on that prediction. But they're saying now that, that this market crash is not going to be anything like 2008. It's not going to be that bad. Now, that's what they're saying. Now, my opinion is we're going to be much worse than 2008 because the bubble is much bigger. Now, real estate values are already crashing. The listings that are coming onto the market are just sitting there. Now, buyers, they're backing out of contracts in record numbers. They just get cold feet or they can't qualify. I've never seen rates go from over double in 1 year. I mean, beginning of the year, we were below 3%. Now we're over 7%. That's crazy. Rents are actually starting to come in. Inflation is killing people at the gas station, at the grocery store. People can't afford stuff. Now, mortgage applications are at a 25-year low right now. 25-year low on mortgage applications. Construction has come kind of to a standstill. It's slowed. But here's the real thing that's going to get them. Companies are announcing layoffs. They're doing layoffs and they're announcing layoffs. Mass layoffs are coming because we're going into a recession. I say we're already there, but we're going to go into a recession because you can't say we're already there. All right, but it's going to be okay, right? It's not as bad as 2008. Well, let's take a look at Redfin stock. Redfin stock was trading last year at $100 a share. Someone in the comments just mentioned it's below $4 right now. It went from $100 down to below $4, 95% price decline. I wonder if the Redfin analysts that they knew that their stock was going to drop 95%. Well, they probably did not. And they probably don't know that the real estate market's going to drop by about 50%. Now, I'm not picking on Redfin here. Let me pick on Zillow Group. Zillow Group, now at the beginning of the year, they were calling for 19%, a 19% increase in real estate. Now, they're the experts, right? Well, let's just say they have skin in the game and they have a vested interest in real estate, so they wanted to tell you it was going up by 19%. So if you ran out there and bought a house going, wow, I'm going to make 19%, you're not going to make 19%. You're already down about 10%, in some areas approaching 15%. But Zillow Group, look at, they're saying also, this is not going to be as bad as 2008. Well, let's take a look at how Zillow Group's doing. Last year, Zillow Group was at $200. Now they're down around $28, almost 90% off. Let's call it that. Let's call it 90% off, right? Almost. Wow, I wonder if they knew what their stock was going to go down 90%. Look at the real estate stocks. They're getting crushed. Now, the reason they're getting crushed is because houses are going to get crushed. Now, people don't believe this, but it's going to be 30, 40, 50%. Now, of course, not in your area. We get that. Your area, it's probably going to be like Zillow Group says, probably up 20% for the year. I don't think so, but maybe. Now, here's the thing that people are falling for, and I don't want anybody who listens to this channel to fall for this. They're telling you to go out and buy these properties. They're saying, look, we're approaching 8% now on mortgages, 7.25% if you got good credit, 8.25% if your credit's not so good. But what they're telling you is to go out and buy the house now because nobody else is buying. So it's a great time to buy. Buy why no one else is buying, right? No one else is buying, so you might as well go out and buy. Get that 8% mortgage, and then you can refinance it later. That's what they're telling you. Well, I'm telling you, there's no guarantee that interest rates are going to come down. So you might be, expect them to come down to 4 or 5% when you got that at 8%, but maybe they go to 10 or 12%. So there's no guarantee these mortgages are coming down. Don't fall for this. But here's the other thing. I can almost guarantee you your house value is going to go down. So let's say you put that 5% down and the house drops 10% more from here. Look, you cannot refinance at that point because you have zero equity in the property. You're underwater. Nobody's going to give you a loan to refinance. So this buy now and refinance later. That's what the agents are pushing out there. Don't fall for it. I hope no one falls for it on this channel. But a lot of people are going, Mike, we can't crash here. There's no inventory. Where's the inventory coming from? Well, it's going to come from the foreclosures. The foreclosures are coming now. They're in the courts. The courts are backed up still. They're still trying to get the evictions going through. The court system's backed up with foreclosures now. Look at who gets hurt when interest rates go from below 3% to up over 7% in less than 1 year. Did it in about 8 months, really, right? All right, well, who really gets hurt here? Well, now you say the winner would be the person that locked in at 3% on their house. Maybe they're a winner, maybe they're not a winner. I'd say the house is going to come down a lot. Now, if they're okay with that, well, that's their choice. I'd much rather buy a house at a lower rate with a higher interest than locking in that 3% and getting the house up here when the house is going to come down. So maybe they think they're the winner right now because they got that 3% locked in. But let's look at who's losing out. Now, who's losing out is the banks. The banks are losing out, okay, because they held a lot of these loans on their books. And when the loan goes, you see, they get an income stream. 30 years of a payment stream is what they get. And when the rates go from 3% to 7%, they cannot sell that payment stream for the same amount of money. They have to take much less money to get that loan off their books to sell that loan. So they'd have to sell it for less money. So the banks are losing out by making these loans all they had at 3% that they were holding on their bank balances. Okay, so they're losing out now because now the rate's 7% and they put all these loans out at 3%. So their assets went down like this. Now, who else has these loans? Well, let's think about it. Well, let's think the Federal Reserve. They have $3 trillion of these loans. Now, what happened to the value of these loans? They bought $3 trillion over the last 10 or 12 years. Well, those loans values have declined a lot, maybe even up to as much as $1 trillion down, right? Well, they don't have to worry about the loss because, well, the taxpayer pays for all their losses, so they're fine. But the banks, I am concerned about the banks. Now, the banks are going to lose again here, all right? So they got all these loans out there, 3%, and they lost on those, right? All right, and some of these people, they're not paying on their loans. I know that's shocking. shocking to you in your area. Everybody pays on their loans, but a lot of people, they're not paying on their mortgage, right? So the banks now, they got to take these properties back. Well, how do they lose again? Well, these properties that were up here are now down here, so they take these properties back, and they're underwater now, so they lose again on taking the properties back. Now, banks, they just make me nervous. I don't trust the banks. I think there's going to be a big failure soon. A lot of people think it's going to be Dutch Bank. Maybe it is. Credit Suisse is another bank that's in trouble. But I say one of the big three is going down, either Wells Fargo, Bank of America, or Chase. I think one of them is going to get in a lot of trouble. And they're getting in trouble because they're losing out on these real estate loans. But so what's happening? Well, it's putting the inventory back onto the marketplace. The banks take it back, and then they contact someone like me, a real estate broker. They go, hey, Mike, you want to sell these houses for us? And I go, why not? Why not? All right. So anyways, the inventory is going to be coming back on the marketplace in the form of foreclosure. Now, you have to be patient with this. Everybody goes, there's no inventory in my area. And that's true. There is no inventory in your area. Yet it's going through the court system. It takes time. We're in the second inning. Give it another 12, 18 months to play out. You'll see we'll be talking about a glut of property. Now, people go, Mike, there couldn't be a glut of properties. Nobody's going to sell. They're locked in at 3%. Look, I've been in this game a long time. I can tell you, people sell for a lot of different reasons, People get divorced. When they get divorced, the court orders the house to be sold, and the house, they have to sell it. It'll sell at any price, guaranteed. Maybe you're transferred from work, relocations, bankruptcies. Bankruptcy is going to be a very big one. You're going to see business bankruptcies. You're going to see health bankruptcy. People aren't in the best health right now. Matter of fact, that brings me to another one, us baby boomers. Some of us are starting to die off. When you die off, what happens to the property? Well, the heirs, they sell it. They sell it really fast. There's many reasons. Buyer's remorse is a big one right now. A lot of people have buyer's remorse. They're city people, and they went and bought this house out on the countryside. Well, they don't like country living. They want to move back to the city. They got buyer's remorse. They put that one up for sale. Now, people sell for all different types of reasons, but the real inventory is going to be from these foreclosures coming from the mass layoffs with all the companies. We're not in a recession now, but I'm telling you, the companies, they're already announcing mass layoffs. This is just it's getting out of control. But to say this isn't going to be like 2008, I agree it's not. It's going to be much worse. Bubble's bigger. It's going to pop. It's already popping. You can hear it now. The stock market's popping also, down about 25% on the S&P, down about 35% on the NASDAQ. Now, I do think it's going to come in, and then I think we're going to get that big short squeeze. I'm telling you, look, there's so many people on the short side that are going to be so disappointed if that big short squeeze happens and we have that big rally up. And I think we will, but I do think we're going to come down first. That's just my take on this stuff. Now, this is a Friday. Everybody get out there. Have a great weekend. But hey, before you go, give me the thumbs up. Why not? Punch the subscribe button. I got some good stuff to talk about next week. Come on back. I'm Tall Mike. Bye-bye now.